Welcome everyone to the webinar, How the Pandemic Opens New Investment Opportunities. My name is Natalia Abdelnour and I will be the presenter of this conference. First of all, we would like to say thank you for joining us and for showing your interest in this conference. We really appreciate you attending this event created by Tayrona Capital Financial Group and Web Congress. It is indeed a pleasure to have here governmental, commercial banking, wealth management, and safe haven investment experts, which I'm honored to introduce, along with a brief summary of their professional profiles. First of all, we have Juan Carlos Jimenez Devon, Director of ProColombia in Singapore, Australia, and New Zealand since January 2018. ProColombia is the country's nonprofit foreign direct investment attraction agency in charge of trade as well as tourism promotion. This organization is part of the Embassy of the Republic of Colombia in Singapore. Additionally, Juan Carlos is a trade commissioner, and previously he worked as an investment promotion manager at Invest in Bogota, which is a private public investment agency. Before that, Juan Carlos worked as a VP Electronic Banking for Industry Vertical in Colombia for Citibank and as an international sales manager at Car Graphics, a Colombian digital printing and fulfillment division of Carvajal, Colombia's first multinational company. Then we have Ethan S. Grossman, Vice President and Wealth Management Advisor at Merrill Lynch. Ethan S. Grossman, Chartered Financial Analyst, began in wealth management in 2010 after 5 years in corporate banking so that he could help clients about some of the mistakes he saw in his own family. He finds meaning in guiding clients on all aspects of their financial investing to family dynamics and guiding clients along their path to success. As a chartered financial analyst, charter holder, Ethan's approach to investing is grounded on industry-leading research, and he prides himself on being a lifelong learner. Ethan co-founded Grossman, Benharrausch, and Associates to serve the needs of high-net-worth families along with Ruben Benharrausch in 2016. Our third speaker is Jose Rasco, who is the Managing Director and Head of Investment Strategy at HSBC Private Bank Americas. Mr. Rasco is the Chief Investment Strategist for HSBC Private Banking, covering the United States and Latin America. He's a member of the Global Private Banking Investment Committee, and Mr. Rasco has over 25 years of experience in the investment industry. He has conducted extensive research on global thematic investing and socially responsible products, as well as portfolio strategies. Mr. Rasco's commentary has appeared in a variety of leading financial publications and media, including the Wall Street Journal, the New York Times Magazine, Fortune, the International Herald Tribune, CNBC, BB Radio, BB TV, BB Spanish TV, and CNN en Español. And finally, we have James Ordóñez, Chief Executive Officer of Tayrona Capital Financial Group. James is an attorney at law with a Juris Doctor degree. He's a graduate from Cambridge University in England and holds a master's degree in international business and advanced banking transactions. Aside from leading this company, which is focused in the hospitality safe haven investment sector, he has been a consultant for major multinational financial groups. Thanks to his contribution to the Union of People and Countries, James was honored with the Spanish knighthood title of Excelentísimo in Barcelona, Spain on March 12, 2016 by the Fundación de Fomento Europeo. So thank you, Juan Carlos, Ethan, Jose, and James for participating as speakers in this webinar.
Thank you, everyone, for this opportunity.
Yes, thank you. Looking forward to it.
Sure.
It is important to mention that this is a conversation in which you will hear the insights from the experts about what are the key facts that are impacting companies and governments because of the spread of COVID-19, and also how organizations and companies can face this new situation and with that still result attractive for investors. We will have 30 minutes to listen to our speakers answer a set of carefully selected questions so our audience can identify investment opportunities. After that, we will have a Q&A session with the audience. Please remember that you can raise your questions or add your question to the chat box that appears in Facebook, and we will choose a few of them in the Q&A. And another important topic is that the recording of this webinar will be made available to everyone in Web Congress and Tayrona Capital Financial Group social media. So let us focus on the financial implications of COVID-19. In recent history, we had never faced a situation such as the one we are going through. Never before the entire nations had been forced into quarantine, which has caused an unforeseen impact over many industries and on the global economy as a whole. This has led to different world governments, their ministries, and departments to take several emergency measures to mitigate the social, public health, and economic impacts of the pandemic. In Colombia, one of said institutions is ProColombia, which is part of the Ministry of Tourism. We would like to ask Juan Carlos Jimenez Tobon, what measures has ProColombia implemented to help encourage foreign investment in the tourism sector during the spread of COVID-19? So, Mr. Jimenez, please go ahead.
Thank you, Natalia, and good evening in the Americas. Good morning here in Asia. Thank you to Web Congress and Tayrona Capital. So, as you saw just a few seconds ago, ProColombia's catchphrase today for the Times is, "Let's take care now so we can meet again." We are hoping that everybody stays safe and at home and complies with all of the regulatory and sanitary issues in the hopes that eventually will later on this year become available and open for business again to receive tourists as we have in the past. Colombia has been incredibly successful in the last 15 years or so in terms of attracting foreign direct investment and also in terms of growing its tourist base. And we want to keep that happening. Of course, we have this pandemic now that has impacted us, but outside of that, it brings us to a time where we can take a rest and think about the future and hope to program and plan ahead in terms of improving our, I would say, global outlook and how to make sure that foreigners and foreign investors understand the importance, the impact of their investment in our country. So some of the measures we have done are things like the Colombia Responde program, credit lines to help mitigate the negative impact of the current issue with close to 250 billion Colombian pesos in support in debt to small SMEs and medium-sized companies in the tourism industry. Some release in terms of payments of taxes, ongoing, including value-added tax and so on. And in terms of investment potential, perhaps one of the most significant ones has been providing that new hotels and new hotel services, hospitality services in cities that are 200,000 in population or above will have a lower income tax rate of 9% for the next 10 years and 20 years for those municipalities that are under 200,000 in population. And this same condition applies to remodeling of hotels or amplification of hotels, so long as the value of the improvement of these or restoration of these hotels is no less than 50% of the acquisition value of the property. New projects such as theme parks, ecotourism parks, agro-tourism parks, and so on, including nautical docks as well, built in populations, municipalities with population under or over 200,000 in population, will keep a 9% income tax rate for the next 10 years, and 20 years for those municipalities also with a population under 200,000. A lot of services will be excluded from the value-added tax. Those are included in some of specific regions of Colombia considered special fiscal regime zones in Urabá, Tumaco, Guapí, Puerto Inírida, Puerto Carreño, Primavera, Maicao, Oribia, and Manaure. Some of these are supposed to help bring more investment into these regions. Again, this is an attempt that Colombia as a country is making, and a strong push in terms of reviving our tourism industry as we come off of this pandemic. We had never had such a good year. 2019, we had more than 4.5 million tourists coming to Colombia. We hope to keep increasing. Our target is to get in the next 3 years or so to 5.5 million tourists a year. And I think we're very close to doing that, as long as we can bring about recovery in the system in general in the months to come, and especially starting 2021. There are some projects also in tax aid to projects in aviation. So tax on gasoline for aviation will be reduced to 5% in terms of value-added tax. Air tickets or passenger transportation ticket services will be levied on a tax of only 5% up until 31 December 2021. Again, also hoping to improve conditions for travelers to come to Colombia. And I think those are the main support programs that Colombia is implementing in order to reestablish tourism business as soon as possible. Thank you.
Manas, many thanks for your contributions and for your introduction to this webinar. Let's move into the following question. It's important to mention that although the spread of COVID-19 is now considered by the International Monetary Fund as the worst recession since the Great Depression, economically speaking, it is projected that global growth in 2021 will rebound to 5.8%. Those companies currently have the great challenge to adapt to new methods and trends in the industry, taking up the hardship as the motivator to improve and stay active in the market. So now this is an open question for all speakers. We want to know from your experience, how could organizations and companies increase their potential and face the current challenges? So we are going to start with Mr. Grossman. What do you think about this question?
So I think this is a great question. And the approach that I deal actually with a lot of business owners. So this is something we've been talking about really since the pandemic began. Before I jump in, I do want to say publicly thank you to all the organizers, to Web Congress, to all of the staff that have helped pull this together. I'm so excited to speak to each one of you that are listening right now on all the different platforms. So as I mentioned, I work with a number of business owners and executives in different industries, and the conversation has been fairly consistent. And I'll tell you, it actually ties in with the types of companies that we look to when we're investing our company's capital or our clients' capital. So first, to your point earlier, the expectation from most economists is that 2021 will be a year of growth, and likely a year of much higher growth than it would have been because of pent-up demand. And so with that in mind, it means let's get your business ready to take advantage of that growth. So first of all, seek out the capital that you need to make the investments in your company, whether it be investments to keep it running or the investments to keep it growing. Within the United States, that may have been the PPP program and others that are being offered through federal government, but also don't be afraid to look at what's available to you locally. I know most cities, counties, and states have offered other assistance programs, not at the same scale as the federal government, but at a significant scale. The other piece is I would consider figuring out ways to change your revenue model as much as possible from being transactional to being more of a service model. A great, well-known example of how this really improves the value of a company, which is something that I focus on with my clients, is growing their wealth, is increasing the value of their private companies. A great way to do that is to move more to subscription. Microsoft is a fantastic example of what happens when you move from a transactional business where every time they got a new transaction, it required them to innovate, not by increments, but by leaps and bounds, to prompt someone to move from one Windows version to another Windows version. And they made the successful transition to Windows 360 that's a subscription base, and we've seen what's happened with their valuations. The last two things ties into some of the first, and that has to do with being a technology company. And by that, I don't mean that you're in the tech sector, but I mean that you've embraced technology in every way possible to improve efficiencies, to allow for people to work from home that you maybe previously didn't consider could work from home, and that you're thinking of ways to use that technology to reduce barriers to doing business, making it as easy as possible for your customers to buy from you, and making it as easy as possible for your employees to work for you and work as productively as possible.
Mr. Grossman, now it's time to hear Mr. Rasku. What would you like to say about it?
Well, I think, I think that Mr. Grossman made some great points. And in addition to being, I think flexible is important, being innovative. And then one other thing we're very focused on is the introduction of technology, the diffusion of technology, as he mentioned, through the different business sectors in the economy. And as you see that happen, you'll see productivity and profitability will rise, and that will be very powerful. We really, truly believe that we're at the beginning of a technology revolution, probably more powerful than what we saw in the 90s, with the introduction of 5G and all the associated technologies that will come along with it. That's going to be very powerful. How does COVID fit into that? It has delayed some of those introductions, and at the same time, it's made them a lot easier because we're doing this. Rather than me flying to Asia to do this conference with you, we're doing this in a virtual chat room, and essentially I am embracing a lot of those new technologies in their infancy, which we will see more people do in the coming months. So that's really an important first step. Secondly, I think, is to focus on the shifts in the technology. We won't come out the same we went in. And so technology and healthcare and many other sectors will change materially. Will consumers be comfortable going back to the big city? Will workers be comfortable going back to a major city, or will they look for second-tier cities where population density is a little lower and where they can have a more robust life without less of the stress and tension of being in a major city? In addition, I think the work from home concept or worker mobility will be an issue going forward. But more importantly, what we focus on is to me, what is one of the more important things coming out of this is that interest rates will be low and that the yield curve will be very flat. That is the HSBC prediction, and you can see it echoed in the Fed's sentiments. And so as a result, we're pretty comfortable with our view, given that we're agreeing with the Fed. So that says that consumers will refinance their debt, and they're doing it at levels that we haven't seen in over a decade. And then we're seeing that the corporate sector is refinancing its debt, and we're seeing that corporate debt issuance reached 1.1 trillion at the end of May. It took us till the end of November last year to reach that level in the US. So corporations are refinancing, consumers are refinancing, therefore the household and the corporate sector, the companies that do survive, will be much healthier when they come out of this recession. And I think the recession will be uneven. Employment growth may lag a bit because we need to see the new companies begin. But I think you will see that the economy will rebound in fits and starts, and that we think the interest rate sensitive sectors, in particular, technology chief among them, offer some very good opportunities going forward.
Thank you, Mr. Brasco. Now it's time for Mr. Jimenez to tell us his insights about his question. What would you like to share with our audience about, for example, unlocking the potential of companies and businesses to tackle the challenges of the pandemic?
Thank you. Well, I think it has to do with a few phases. The first phase is basically recovery, and that's how businesses and families begin to travel again. It's basically on a short-term domestic trips, almost the staycations, as the fear of flying, crowds and things like that subsides. The second phase is where businesses will actually begin again to travel, to meet clients, to have the face-to-face, again, provided all the security measures and so on. And especially to be very keen on what the specific travel bubbles, those connections, origin, destination that will be set up between countries to, make sure that it is safe for people leaving as well as arriving, to have either vaccines eventually or before that testing to make sure that the possibilities of contagion are kept very low. And then the recovery, you will have international travel coming back online again, and that being ready for, folks from Asia going back to our countries in Latin America, visiting, and again, both for business as well as leisure. It is important to understand that the opportunities are still there for investment in tourism infrastructure. There are so many things available and ready to be done. Again, I urge you to keep your heads up and ready for when those opportunities or the chance returns for you to look at Latin America in terms of investment. I think all of our countries, and Colombia specifically, will be looking at doing as much as possible in terms of supporting this new norm tourism industry, segmenting the right types of travelers, age groups, demographics, population, the types of luxury clients, for example, and how we need to make sure that they understand the what's available in Colombia in terms of offering for travelers, and do the best that we can in terms of delivering that. Thank you.
Thank you, Mr. Jimenez. Let's hear what Mr. Ordóñez would like to say about it.
Natalia, thank you very much. And thank you everyone again for joining on this amazing opportunity to share these particular ideas. My answer to the question actually goes to two particular terms. Number one, all companies, business organizations needed to readapt, and we all needed to reinvent ourselves. So this was precisely a moment to totally create from the crisis, from the mess, and from the chaos that actually created the world when the pandemic started. We needed to basically all breathe for 2 seconds and say, okay, how are we going to do it? I have to say that in our case, we represent let's call it three different lines of businesses that have actually represented major challenges. And this question of how to readapt or to reinvent has been actually very serious. From one side is actually the industry, the hospitality or tourism, on which, of course, there is no secrets here. Even though now we can do lots of things like work from home or using all these technologies to communicate while we cannot travel. In the tourism sector, the very big challenge has been we cannot create virtual beaches, or we cannot create virtual paradises. People need to go there. The guests needed to actually travel. And traveling has not only been a challenge of jumping onto a plane and arriving into a destination, but actually has been the challenge on going back home. And that's actually one of the future challenges that we are going to experience. Because let's say I am in New York and I want to travel to Cancun, Mexico, or I want to travel to Cartagena, Colombia. It's not only the question of how I'm going to arrive there, how I'm going to enjoy my vacation, but then it's going to be the challenge of returning home as well. And so in the tourism and hospitality sector, the very big challenge was all hotels almost globally needed to close, needed to shut down. Hospitality was living pre-COVID-19 one of the biggest occupation rates ever lived in tourism. Many places, many countries, many hotels were actually experiencing occupation rates over 80 and actually close to 90% in many locations. And during COVID, all these occupations rates went down to literally from 3% to 0. How can you create income? How can you create a business when there is no tourists and you can actually not create all of these? So the only answer was the reinvention and the readaptation of the business. The World Travel Organization launched actually a couple of months ago a very good initiative that is literally what ProExport it was referring here, which is basically the buy today the experiences of tomorrow, or stay at home now, invest now. And that has been one of the reinventions in the hospitality industry, has been how can we generate revenue with no business? And the answer has been creating actually an investment model that never before hotels or the hospitality industry created, which is giving the people the opportunity to pre-buy at amazing rates opportunities to travel in the future. Jumping quickly into the second business line that we represent is actually the investment business. The dynamics and the challenges were very similar to the hospitality industry. When everybody in the world began to lose their jobs, when the matter began to focus on our survival, how could you actually offer investment options when people were only thinking on survival, on how to eat or how to keep my job? So it was almost a contradiction. If we were going to try to talk to anyone, do you want an investment opportunity? I don't want to refer about people. The direct answer was, I don't want to hear anything about investments because I need to survive at this moment. And that's where in the investment field, we all also needed to reinvent, to actually re-educate people to actually show that investment is not only an opportunity for the wealth, is not only an opportunity for moments of good, but also for moments of crisis like we are living right now. I also believe that finally all companies, regardless of the sector, is also the perfect time to invest in training for their employees, improve, of course, the digital skills, added value tasks, specialize in data analysis, cybersecurity, and all those things that we are learning. But going back to the conclusion, my main answer is we had no option other than to reinvent ourselves.
Okay. Thank you, Mr. Ordonez, and thank you, everyone, for the excellent insight and recommendations provided to our audience. We will move into the third question. Keeping in mind that there are several different types of investment options available, such as banking, stock market, safe haven investment, among others. Many of these options become easier to acquire for investors due to the current situation, which has been equated to the economic crisis of 2008. So our next question for our investment alternative experts is the following. In your opinion, what are the best investment options under the current conditions and why? And now it's time for Mr. Rasco to answer this question.
Thank you. Currently we are very interested in several parts of asset allocation. So we are overweight in terms of equities currently, with a focus on the U.S., China, and we just took up our ratings in Europe because we feel that if you look at the amount of disease in Europe, the COVID curve has fallen precipitously, and their economy looks like it is going to rebound more quickly than people thought, if you look at the data from this morning. So we've upgraded Europe as well, with a focus on Germany and France. So on the equity side, we think that the equity markets have rallied a great deal, probably more than the economy would usually call for. So we think there is going to be some volatility in the short term, but over the next 12 months, we think equities should perform well, with a focus on those major economies. And then when it comes to fixed income, I think the fact that the Fed is keeping short rates or policy rates low, close to zero, and you're seeing that most central banks are doing the same, keeping rates as low as they can to try to help turn growth around. That is a positive for the economy. The curve is also going to be kept flat because the Fed is buying treasuries and mortgage-backed securities in the longer dated instruments. So therefore, the yield curve will remain flatter, and it will be good for interest rate sensitive sectors. If you look at the corporate markets, the Fed has announced that they will start buying corporate bonds. So do not focus just on the yield, focus on the total return of the bonds and the investments available. We like investment grade credit because we think that as the economy globally continues to grow, there will be some difficulties and there will be some struggles, because you'll see employment lag, and you'll see that the disease, there will be second waves of the disease in most places. We don't expect it to be as bad as the first wave, but it will be there. So therefore, we're focused on quality companies and companies that have good net cash. In other words, they can generate cash, they have cash, and they do not have excessive amounts of debt. So those are really some of the key factors from our perspective. In the alternatives business, we are very focused on private equity and hedge funds. And last but not least, many people like gold. That's been a very good investment for us this year. And we continue to recommend it mostly as a hedge for clients who like it. But that's another area that people are very interested in. So I think that sort of sums up what we see. And we are becoming, in the equity markets, we're becoming more pro-cyclical as the economy begins to expand in the third quarter in the US and many parts of the world. This summer, we'll see that global economy begin to turn. So therefore, you want to start looking at some of the more cyclical sectors, not just defensively positioned equities. So that's, and again, the focus should be on this long cycle, the secular bull cycle for technology that we're going to see, and the shifts in innovation around the world. So thank you.
Thank you, Mr. Rasco. Now it's time for Mr. Ordonez to answer to this question. What do you think are the best options for investment given the current situation?
Kind of kill three myths. The myth number one is that the term investment is not only related to make money. And I'm going to specifically talk about that in 1 second. The second myth that we need to also kill is that investments are only for the rich or the wealthy. And the third myth that we need to also kill is that an investment is only for us. An investment is something that actually should not only benefit us as individuals or as companies, but also to everyone. Having said this, if the investment should not only, and the term investment should not only be related to making money, I believe that the best investment options that a person could opt to invest is actually on themselves. What I have to say is that people not only need to invest in what can make me more money, but also where can I actually get more enjoyment, leisure activities, in addition to, of course, obtaining the return of the investment. So my point is that investments should give people benefits not only in terms of capital, but also in terms of their personal growth and enjoyment. Point number one. Point number two, investments are not only for the rich or the wealthy. And actually here I borrow this from a recent article, an email actually that I received precisely from HSBC, that it was giving a very good analysis on this particular statement. And even if we don't have a sufficient investment capacity, or if it's low, or if we are in financial trouble at this moment, investment is actually taking opportunities to prepare for the future. Of course, there is no investment alternative without risk, but we also need to prepare the best possible for unprecedented circumstances like this. So we should kill the myth that if I'm not rich and I'm not wealthy, I cannot invest. Invest is actually for everyone. And last but not least, investments should not be specifically only for our own personal benefits. Investments create opportunities for everyone. If I'm investing, for example, in the development of a new company, that investment is going to create more employments, and therefore is actually going to generate a better capacity for a country to also help every single citizen under unprecedented circumstances like this. Socioeconomic growth is actually the key term there, and we all should look for where can I invest that it not only will benefit me, but also will benefit the society that we all live in right now.
Thank you, James. And thank you, everyone, for providing us with your insights and your input about this question. Now we have this question, and we would like to move the focus of our conversation for a bit onto the strategies implemented by the company or organization you are representing today. So could you please tell us more about what have been the actions taken by, for example, HSBC Bank, Merrill Lynch, and Tayrona Capital Financial Group to mitigate the impact of the COVID-19 pandemic and, for example, overcome the current challenges? So, Mr. Ordóñez, you can start answering to this question.
Thank you. First of all, I think that it's important to mention that Tayrona is part of the hospitality investment sector. In our case, our portfolio is comprised of 4 main business lines, all of which are considered what we call safe haven investment options, and that's actually our direct answer to that. This is basically protected from market fluctuations, offering as possible guaranteed returns, even on times of low occupancy of hotels or resorts, as is happening right now, or under other unprecedented circumstances. Investing in a project is part of the Tayrona's portfolio, has a great value for the development of many countries. Tayrona is actually a sovereign fund manager for many countries, and we not only represent our company, but actually the economy of many countries. So when we offer investment opportunities, they are all precisely related to boost the socioeconomic developments across the regions in the countries where we operate. So we are actually on that business, on the business of creating more opportunities, opening for new sustainability and conservation efforts, and also, of course, giving opportunities for personal and capital growth. In our particular case, when an investor actually becomes part of Tayrona's projects, there is a series of perks that are actually related to my previous answer, which is not only to capital growth, but also to personal growth, not only in experiences, but also in energizing ourselves, in precisely learning something more, and not only dedicated to the actual capital growth. But of course, our clients will receive all the benefits that a traditional investment will receive. So we have created actually investment options to bring our clientele a curated selection of very nice properties around the world with investment options, with personalized luxury travel experiences that actually are going to allow on this opportunity of travel pay now, experience later, and to help recover the global economy by helping creating many more employments, etc. Last but not least, I have to say that all of our investment options are not only created for high net worth individuals, but also for all kind of mid-sized investors that will actually have the opportunity to not only have the way to see their capital grow, but also their experiences grow as well. Natalia, we're not hearing you.
I'm so sorry. Okay, so I was saying that now it's time for Mr. Grossman to tell us his opinions about this question and also about the previous question we raised regarding what are the best investment alternatives that are in the market. So please, Mr. Grossman, please go ahead.
Thank you, Natalia. And it looks like I got the lightning round here, where I've got two questions in one. So, in regards to the best investment options, I'm going to try and leave each of you with something that may be actionable depending on your current circumstance. So while I agree with the other speakers that taking a long-term view is of paramount concern when undertaking any investment, we're not in this to get rich quick. We do have opportunities out there that might be more specific. So first of all, because the majority of my clients are in the US, and are high net worth individuals, one thing I would actually suggest that has no capital at risk is taking advantage of what these lower values have on your private real estate and your private companies. So take advantage and maybe look at doing some wealth transfer from one generation to the next, because we're able to do that at much lower valuations today than even just 3 or 4 months ago. In regards to some tactical investments that we like now and things that we think will play out in the long term, much to the point that was made earlier, with low interest rates, exceptionally low interest rates. In fact, these are the lowest interest rates we've seen in 5,000 years. Going all through history, we cannot find a record where interest rates have been lower than where they are today. That means bonds are not going to be the type of investment that many people are accustomed to that can help provide them the income. And so we very much favor equities. We tend to favor US equities over the rest of the world, but prefer developed equities that might be US, Europe, Australia, and a few places in Japan and Asia as well. We prefer equities over bonds. What we focus on are solid companies that have been able to grow their dividend over the long term. So we focus very much on dividend growers. And we focus on an area that we call uber growth. Think of technology, think of healthcare, sectors where there's some real opportunity for growth. And coming back to the answer to my first question, where we see a subscription type model or a revenue model where there's recurring revenue. And then for those that are a bit more in the risk-taking mode, especially those that might be looking for something that might be a little more tax advantageous here in the US, you can start to look to dip your toes into the energy sector, specifically a select number of master limited partnerships. They offer fantastic yields. They offer some tax advantages in regards to how they pay out the income. And if you're picking the right ones, they've been very much depressed in value, and there could be some opportunities there. In regards to the last question, what has Merrill Lynch done? And Merrill Lynch is a part of Bank of America. What has Bank of America and Merrill Lynch done to mitigate the issues of COVID-19? First of all, one of the most impressive things I've seen is with a company of our size, we're able to put significant resources behind supporting not only our customers, which are so important to us, but also our employees. So they moved within Merrill Lynch, they moved 22,000 people from working in the office to work from home. This includes thousands of people that did not have previous capabilities to work from home. We've moved basically everything we can to be digital. So as far as making things easier to do business with us, we've made it so that the vast majority of accounts can be opened through DocuSign or other similar technologies. The vast majority of account or documents that we need completed for trusts, for loans and things of that nature are able to, again, be signed electronically. So just really moving everything to be digital and leveraging decades of investment in our technology platform has been a huge mitigant to the issues in this regard. And overall, our main focus, and this has been a focus of Merrill Lynch and Bank of America for a very long time, has been just making things easier to do business. And again, really leveraging technology to do that. And then the last piece I would touch on, and this is a bit of a related to what happened after COVID-19, and then in the US especially, what's happened with the social unrest. I'd be remiss if I didn't really highlight the $1 billion, I'm going to say that again, $1 billion commitment that our CEO, Brian Moynihan, made to fight the injustice and inequality that we've experienced here in the US. That's a 4-year commitment, and furthering a lot of initiatives that we've already made investments in, partly through the Smithsonian Institute in the US and many, many, many other local charities and organizations working to fight poverty, improve educational outcomes, and correct the issues that we've had of inequality here in the US.
Thank you, Mr. Grossman. Now it's time for Mr. Roscoe to answer to this question. Mr. Roscoe, please go ahead.
So I think if you look at COVID-19 and what has our bank done, at HSBC, we're a global bank, so we've had to battle this disease with our clients and for our clients in every country in the world. And so we have done a great deal in terms of trying to support individual clients through loans and all kinds of loan forgiveness and loan forbearance. We have worked with our corporate clients in the commercial bank as well as the private bank and the investment bank in trying to do the same and helping them raise new funds. And if you look at where the company has gone, we've done a great deal in terms of sustainability. And I think one of the real messages that we need to take away from COVID is that the concept of sustainability or impact investing, which I'm very familiar with, is something that is near and dear to our hearts at HSBC, and something that clearly has gotten a shot in the arm because of the horrible global pandemic we're in the middle of, because it has shown us that when you don't use as many pollutants, the air can clean up pretty quickly, and we can turn our lives around and improve the quality of life pretty quickly. That's been a pretty big focus for us, and that's why we're excited when we see a lot of the environmental issues that have come to the fore in the last couple of months with COVID really continue to stay there, and therefore it's more of an emphasis on creating a sustainable economy for the future and an economy that can create jobs. And if you look at the sustainability concept, it is something that would allow us to enter a new era of human development where we're one with the ecosystem and we're not battling Mother Nature, we're working with it. And at the same time, creating jobs, creating tremendous wealth in the adaptation and diffusion of these new technologies, and hopefully a better working environment for everyone. In terms of what we've done as a company, we've clearly transitioned. Where I'm sitting in my house tonight, and I'll be here for months. And I've been told that, to my wife's dismay, I may be here for a long time working locally or working in my house, and come to the office once in a while and do a lot of my visits with clients this exact way. So we have adapted. We've tried to embrace the new technologies, and I think we've done so very successfully. On a recent client call, we had more than 2,000 people, which is a pretty good number. So We've done an awful lot to move forward with our clients, with the community, and I think we have to continue to do that to continue to develop as people and as a community and the bank within that community.
Thank you, Mr. Rascal. Thank you again, everyone, for your contributions to this great conversation. Now we will proceed to answer 2 questions from our audience. Our webinar is being broadcasted live, and we have received the following questions from our audience. So the first question is, where should new investors go to study the markets and trends to take better investment decisions? Who would like to answer this question?
I'll answer the question. So I think for those that are trying to understand what's happening in the market right now, a great place to start is if you haven't gone and gotten a basic education in economics, bachelor's type classes in economics, and there's a tremendous amount out there. Bank of America has a partnership with Khan Academy, which has a tremendous amount of resources in understanding the market. And most financial firms have basic education courses that they'll offer to their clients at all levels. So I would reach out if you know anyone in finance. That might be a good place to start. But otherwise, I think Khan Academy has a fantastic library to begin with. And then from there, I would look to some other institutions that might offer some good education. I myself am a chartered financial analyst, and the CFA Institute has some outreach programs that provide for education at varying levels, as do most major universities, whether it be Harvard or the Chicago Booth School of Business. A lot of them are offering online courses free to anyone that's interested, and those would be some good places to begin.
Thank you, Mr. Grossman. Anyone else would like to answer to this question?
Yeah, I'd like to throw in an idea. In addition to the traditional methods of learning, and I think those are all good ones, but I think in today's world, sound very simplistic, the internet. If you look at Twitter, some of the best economists in the business are on Twitter every day. They're on there posting their ideas and very insightful stuff. So something as simple as Twitter or LinkedIn, a lot of these social media platforms, believe it or not, people have a real interest in getting their idea across, and you can learn a ton by just monitoring those particular and others and just reading news. And the other thing I would say is don't focus just on finance. I've been in the business for more than 30 years, and I can tell you a lot of the best ideas I've had didn't come from the world of finance. So you can come up with great investment ideas. I mean, I think, Ethan is absolutely right. You need to understand the fundamentals before you do anything like that. And then you need to talk to professionals about what you do. But to get new and different ideas, read disparate sources. Don't read just the Wall Street Journal or the Financial Times every day. Look at different things and try to find unique ideas that could lead to good investments, particularly for you, not just the broad audience.
Okay.
I would like to add to Jose. I agree with you not only 100%, but I will also have to add that these days that this actually new concept of webinars has been created. I think that we all have had the opportunity to learn more that actually for free in many things that actually more than I did in many years of doing courses, etc. when I was a student at regular times of school and university. So I just agree with you, both of you, 100%.
Thank you, Mr. Dañas. Mr. Jimenez, do you want to add something else?
Oh, well, I think the educated press is a good point, and listen to investment promotion agencies, for example, and credit agencies also, and see how that fits into your personal strategy, an investment strategy, or corporate strategy, if that's the case.
Okay. Thank you. For the sake of time, we have chosen an additional question, but it's important for the audience to know that any answered questions will be addressed via email. And the second question we received is what incentives are being considered to aid in the recovery of the local and global economy? So who wants to answer to this question?
Well, I'll give it a crack, and I think if you look, the key thing from our perspective was that many central governments, from China to the U.S., all over, have stepped up and said they're going to increase fiscal spending, right? So that's important. You're going to see, hopefully, an infrastructure bill in the U.S. this year. I know in Colombia, public-private partnerships are very important and very well done. So fiscal spending is important. I think the most important piece is that the Fed has stepped up in such an aggressive manner and continues to do more seemingly every day. And they have guaranteed liquidity for the markets at the short end. So when banks are trading overnight and in the short term of the part of the market, there is liquidity. There's sufficient liquidity in the market, hopefully. And the Fed has guaranteed there will be. And then in the long end of the market, the Fed has continued to buy bonds and notes and mortgage-backed securities to make sure that interest rates stay low and that the curve doesn't get overly steep, but it stays flat, which provides lower cost of capital, lower debt service. So I think that combination is very important because it's going to ensure that a health crisis and a recession doesn't become a financial crisis, because that's what we want to avoid. And I think the central bankers have done a great job of doing that, and more to come, I think. But we think there's cause for optimism.
I'll just add to Jose. I think he raised some great points. To give people an idea of the speed at which the Federal Reserve moved, over the course of about 9 days, they put into place more programs than they put in place over the course of about 9 months with the global financial crisis. So in 1/30th of the time, they were able to put more support into the market. Now, what does that mean for people in their pocketbooks and locally? It means when you go to buy your home, it costs less because your mortgage rate is lower. It means when you need to put more money on your credit card because of maybe some unemployment, maybe not for you specifically, but for your customers, it means that it's a lower cost for them to borrow, and that helps the consumer. And then the last piece, what I know mostly is what's happened in the US, but I know it's happened all over the world, in Europe, in Latin America, and Asia. It's the direct support to different citizenry, whether it be through unemployment insurance or direct payments through stimulus payments. We're seeing that globally, where over 150 countries, it's basically every country in the world, has done something to do direct support to their citizenship, and that helps the consumer, which is the driver. The single largest driver to the global economy is the consumer.
Thank you, Mr. Gross. Yeah.
I will add something very important. I think that what is happening now is that we are learning from history on a very important basis. After World War II, when the world was living a very similar disaster situation, not only because the cities were destroyed and the economies were destroyed, the question always was how the world actually recovered so fast, and the answer was something that it was called the Marshall Plan. The Marshall Plan, more or less, without giving a very specifics on it, was the opportunity to reinvent the economy of the world based not in the traditional values of gold or supporting elements to create more money, but actually on the new employments and new opportunities that the reinvention of economy was able to create. What we are living now is actually an opportunity to increase or update or upgrade that Marshall Plan that was done in the world that started in 1945. And like both Ethan and Jose were saying, certainly we are doing in months what it was never been able to possible do it in years. And that actually is a very, very amazing opportunity for the world to reboot. And that's how I see this COVID and pandemic situation, is the opportunity for the world to reboot ourselves.
The one last thing I'll add, Natalia, and this time ties directly into what James and Jose said, is at the end of the day, central governments can only do so much. What really matters is what happens on the ground. And if you're really wondering what's happening in your local community to recover, look at the entrepreneurs, look at the small businesses, look at the restaurants that have pivoted to be takeout as opposed to dine in. Look at the service providers that have shifted the way they provide service to their customers and clients. At the end of the day, the best stories I've heard of assistance have come from the business owners that I advise, whether it be direct help to their employees, providing them food, providing them with other financial means, or with their creativity to say, we need to move the company in this direction, in a new direction. And it was a direction we may have been heading in, but we're going to head there faster and stronger than we ever expected. And that, I believe, is where each local economy is really going to move forward. It's with the entrepreneur, and it's with that capitalist drive to create and grow.
And Natalia, if I could just add one more thing, I'm going to take James's point before about creating a new Marshall Plan. If you look, a friend of mine, Jeremy Rifkin, who is very involved in the world of sustainability, wrote a book last winter called The Green New Deal. And it's gotten a bad name in in the US because of politics. But what he's saying, James, is exactly what you just said, that we need to reinvent ourselves, and we need to reinvent the way we work, eat, and play. And we can invest in these technologies and this new way of life, make a ton of money, and make a brand new world which is more sustainable and better for our children than the world we grew up in and that we left them with. So hopefully we leave them with something better than it looks today.
I agree. Totally agree.
Okay. Thank you so much. Mr. Jimenez, do you want to add something else?
Just to add the importance of focus from a government perspective, making sure that we support employment in SMEs. And in the case of the tourism industry and the tourism sector, it's a very large purveyor of employment in the low-skilled labor market. And I think that's very important that the spending is there, the support, but also in terms of making sure that entrepreneurs understand and take up all the possible opportunities for growth and development. Things like e-commerce instead of, working from specific brick and mortar, using e-commerce for food deliveries, everything that has to do with work from home and using the new technologies to make sure you increase the efficiency of your business. I think that's critical, and it will be critical in terms of maintaining our economy. But specifically jobs, I think that has to be paramount, and of course that after we make sure that everything is nice and safe to go out.
Okay, thank you so much. We need to conclude our webinar because we are past the established wrap-up time. But we request our audience to leave the name of the presenter to whom you would like to address your question in the chat box, and we will reply by email to your questions. That's everything for the time being. We hope our audience has found this a valuable space to learn about the types of investment they could opt for during this trying time. Also, we would like to wish you good health for you and for all your families. And thank you again for joining us. Please look at Web Congress and Tayrona Capital social media channels to listen to the recording of this event. Thank you so much.
Thank you.
Thank you, everyone.
Thank you, everyone.
Thank you
Great
all.
honor, gentlemen, to do all this with you.
Thank you all.
Thank you.
Thank you.